Despite claims from the White House of a strong economy, some argue that this financial situation is a ticking time bomb. Now the national debt is exceeding 120% of GDP, and interest payments are outpacing national defense spending. Let me say that again. Pull a Donald Trump here. Interest payments are now outspending national defense. So are we living in an economic illusion? Here to break down all of this and give us the growing deficit and how it could impact everything for you, from your taxes to the future of the middle class, is Carol Roth. She's a recovering investment banker and author of You Will Own Nothing. So, Carol, what are the risks of keeping a $2 trillion deficit, even when we aren't even technically at war right now?
It's a perfect analogy, and it's exactly where I was going to go. Imagine having wartime emergency spending on the regular. That is what we are living with. And that is destructive in any sort of financial backdrop. But Jill, as you said, we have 120% debt to GDP ratio. That is about double the high end of what is sustainable long term. So if we were any other country in the world, if we didn't have the biggest military, we didn't have the biggest economy, if we didn't have the world's reserve currency, if we didn't have the world's trading currency, we would be in a sovereign debt crisis. We have been able to buy ourselves some time, but that party doesn't go on forever. And because we are all of those things, if we have an economic collapse, it could take the entire world down with it. So this is a very serious issue. And to my chagrin, in all of the debates that we've had, we haven't had any of the moderators bring up what are you going to do about this national debt crisis we're facing. And we haven't gotten really a good answer from either of the candidates on that because the media just tends to ignore it.
Absolutely. And this national debt issue, it seems like I don't know if it will be addressed by any party at this point because there's no incentive to do so. But at what point will it get to where we can't pay, let's say, the interest payment, where it's like, okay, we have to change something. We have to do something different because we can't continue like this anymore. I think it may take some kind of wake up call like that in order for there to be anything done. So what would kind of have to happen in your mind for there to be a wake up call like that?
Well, first of all, you're absolutely right. Human nature, and particularly American human nature, is to fix problems after they happen, not to be proactive when you see this problem. Now, if I could tell you exactly the point in time, I would be on a mega yacht in the Mediterranean right now and not having this lovely conversation with you ladies. But I do think what's going to happen first is something where they're going to continue to inflate away the debt. So basically, we only have so many levers to deal with. We can collect a certain amount of taxes, but we know at some point that slows down the economy and they end up taking in less. They can curb spending, which, as you said, is politically not that popular. And then if you're left with nothing else, you have all of this debt. Well, when you have nobody left to buy it, what happens? The Federal Reserve comes in. They have to print money from nowhere to go ahead and absorb that debt. And that ends up being highly inflationary, which is one of the drivers of the inflation that we've been living through for the last 3.5 years. So I can see a scenario where we have this massive ongoing inflation first. And I think that is the reality. The worst case scenario is that we end up in some sort of a war to do a financial reset, because not every war brings about a financial reset, but every financial reset that we have had in modern times has been preceded by a war. And with everybody being tied to the US dollar and affecting the global economy, if things get too bad and they need to decide that, hey, we need to reset the debt levels, or maybe we need to raise the price of gold, or we need to find some way to reset the stakes here, there needs to be a catalyst to that. Everyone's not just going to agree. You're not going to get, China and France and the US and everyone just coming to the table for fun to do this. That could be the worst case scenario. So no matter the situation, what it means is if you're in the middle or working class, you are going to see best case ongoing inflation. And that means every dollar that you're working for is buying less. and you're really seeing your quality of life impacted. And I don't think that people have gotten their heads wrapped around it. Otherwise, we would be having marches on Washington about this issue when there's been relative, maybe some complaining at the grocery store, but we're not seeing that level of demonstration or activism.
Yeah, I think the one thing that we all do know for sure is that we don't have a willing political class to stop the spending. But you went to the personal consumer. So I want to take you back to an old commercial. Do you remember there was a guy in the backyard and he goes, "I'm in debt up to my eyeballs," as he's cleaning his pool? I want to talk to you about just consumer debt and the way that everybody is putting money on their credit cards. How is that adding to this illusion right now that we have a good economy?
Yeah, so we have sort of two aspects here. You have the government that is window dressing with their deficit spending, and then you have the consumer who is desperate to keep pace with their quality of life. They're trying to pay for food, they're trying to pay for rent, maybe take a trip from time to time. And so we're seeing this on their personal balance sheet happen in a couple of places. One is the personal saving rate, and that is way down. It's under 3%, 2 point something percent. At this point, the historic average is about 8.5%. And pre-COVID, February 2020, I think it was around 7.7%. So we're seeing that people are saving less. They're putting less into saving. At the same time, we're seeing that credit cards and other forms of personal household debt are going through the roof. And that's in areas, not just for buying a home, but for direct spending. So as I said, the credit cards, the automobile debt, and so on and so forth. So you have a consumer who's been doing everything they can to keep pace, and their personal balance sheets have been wrecked, but it looks like the consumer is strong and doing well because they continue to spend until they run out of runway. I think the big catalyst for that could be a shift in the jobs market. And that's why you have the Fed, with all of this mixed data, lowering rates, because they too are concerned that if they get some softness in the jobs market, it really could send everything tumbling in the wrong direction.
Yeah, and I wanted to ask you a bit more about the personal finance aspect, because I think something that's been pushed a lot are things like Afterpay, the buy now, pay later, these increasing interest rates on people. And so people think, oh, okay, I can afford this right now. I'll just kind of pay for it later. And eventually these things really rack up for people and the interest rates are crazy. At what point do you think there should be maybe more regulation on these things? Should there be some kind of just messaging to people saying, hey, this is going to catch up eventually? I know you mentioned people trying to keep up their current lifestyle, but sometimes we've also seen, even when the economy is, let's say, not so good or inflation is bad, we'll see, Christmas spending is through the roof or something like that. And of course, it's totally up to people to do what they want to do, but also it does come back to people in a way, just like how we talked about the national debt. So what would kind of be your advice to people with the personal finance there?
Yeah, I mean, it's so frustrating because we're seeing these massive balances at the time when we have very high interest rates. I got one of my credit card notices, and I pay off my credit card balance every month, always have. But if I were to not pay it off, it was something like an average percentage yield of over 31% a year. That is incredibly insane. Now, we all pay for people to be educated in this country. I do not understand why there's not financial literacy and economic literacy, unless you take a very cynical view, which is that they want consumers to go into debt to fuel the economy and to be beholden to the government to solve their problems. So I think this is best solved through individual responsibility and having more personal financial literacy programs. I know the idea of capping credit card rates sounds great in theory, but what happens, like with any other price control, is it ends up having these outsized and unexpected effects. So if you are somebody with maybe okay credit or bad credit, guess what? You're not going to be able to get credit from banks anymore. And that means people who are, really looking for credit instead of going to the bank that they maybe don't like to deal with are going to go to Big Jimmy and Little Jimmy, and they're not so great with their bankruptcy policy. So we don't want people doing that. And certainly even the people who do have good credit, they're going to find that, whatever rate they're paying is more expensive because of these artificial caps. So I know that's a way that we want to try to solve the problem. problems, but we don't want to create new problems in doing so. So letting people understand financial literacy, and I know personal austerity isn't a lot of fun, but the best path to wealth has been shown to be delayed gratification. And I know right now people are just struggling for food and rent, so this is a difficult message, and I'm certainly not trying to poo-poo that in any way, but finding the areas that are more discretionary and cutting back there for some period of time so that you have the buffer and that you don't have to be taking on this debt, which is just going to compound and eat away at your ability to have a stress-free life and to create wealth. That's what you really have to dig deep and do right now.